Good morning, degenerates, and welcome to another episode of Boring Crypto IO, a place where I read you the boring crypto news every morning, Monday through Friday, just so you don't have to. My name is Not Important, and I'm your host. Let's do it. Singapore High Court rules crypto personal property, compares it to fiat money. That's a win. SEC appeal could amplify Ripple win, says Ripple Labs legal chief. Strong XRP. And the big story, Blackrock study reveals optimal Bitcoin allocation in portfolio is 84.9%. Blackrock going to tell its customers that they need to have at least 84.9% of their portfolio allocated to Bitcoin. BANANAS to the market. Current market cap, guys, sitting at 1.17 trillion. Bitcoin dump sitting at 48.4%. ETH dump is still flat at 19, and 21 Gwei will get in each transaction. Fear and greed sitting at 52. Were we at 50 yesterday? I don't even know anymore. Who am I? Sideways. After the dump, not a lot going on the daily time frames. Filecoin down 4.3. Threes, fours, things like that. Maker 4.61, 16% on the week. Yeah, nothing too crazy from yesterday, guys. Mostly sideways from what I can tell. Yeah, that's about it. Let's go to Bitcoin. When I left you last time, yesterday, guys, I was showing a potential bull flag. This is on the 1 hour, by the way, or excuse me, bear flag. This is on the 1 hour. This is now, this is way too extended to be a bear flag, but this is an ascending channel, which have the potential to break to the downside. This is the 1 hour. Let's look at it on the 4 hour. 4 hour, you can still kind of consider this a bear flag. I'm not sure I would draw it like that. I would do something different. But this is we're definitely ranging inside this channel. On the 4 hour, this wick is actually showing me a bounce, a rejection, excuse me, off the 29.3, which makes sense. But let's go back to the 1 hour, give us more smaller time frame detail. But yeah, if you were playing this channel, swing high, swing lows, etc., etc. Again, this isn't financial advice. I'm not a financial... God, I get so tired of saying this shit. This isn't financial advice, nor am I a financial advisor. This is strictly for entertainment purposes only. I don't even know how to trade. I'm not that smart. I don't even know what I'm doing. So, with that being said, let's move on. But, what are we doing right now? We are ranging from 28.9 to 29.3. I got a strong feeling that we're going to roll over, go back down to the 28.9 potentially. But with that being said, I would watch this channel for a breakout to the downside or the upside. I'm feeling more downside. I've told you guys that. And hopefully, if we do break out of this ascending channel, we bounce off this 28.9 level at the bottom of the purple box. Outside of that, right now, guys, today, expect some volatility. The FOMC meeting, Fed rate is coming out shortly, if I remember correctly. I don't remember if they're early in the morning or in the afternoon. I don't even know anymore. But with everybody's betting for a 0.25% increase in interest rates, if we get anything outside of that, whether it be a pause or a higher interest rate bump, expect some decent volatility. With how much people are betting that we're only going to get a 0.25, if we do get that 0.25, I wouldn't expect, believe it or not, I wouldn't expect too much volatility because everybody's expecting that to be what the Fed comes out with. What I would pay attention to is listening to this is so lame to say that we have to play these games to listen to these people speak, but listen to how Chair Jerome Powell is talking. Read between the lines if he's speaking hawkish or dovish, etc., etc. If he's speaking hawkish, I would expect probably some downside. If he's speaking dovish, I would expect possibly some upside. Just things to think about when that's goes down this afternoon or morning. Again, I think it's this afternoon. I think it's usually around 2:30 when the FOMC meeting happens. Let me see if this says. No. Still talking about Bitcoin. Okay. So 14. Okay, so this is, yeah. So, sorry guys for that pause I was reading. TradingView is saying that the interest rate decision is going to come out, be announced around 1 o'clock. No, 2 o'clock. Yeah, 2 o'clock. Eastern time at least. That's where I'm at. So be prepared for that. And that's all I really got, guys. I mean, besides figuring out what direction Bitcoin wants to go right now, and this channel is being very predictable on the 1 hour at least. So if you are into the swing trading, I hope this helps you. Let's move on to the news. Singapore High Court rules crypto personal property, compares it to fiat money. Judge didn't see any difference between crypto, fiat money, or shells as long as those objects, physical or not, share value created by mutual faith in it. Cryptocurrency is deemed property capable of being held on trust. Judge Philip J. of High Court Singapore decided in a ruling on July 25th. The judge said he didn't see any difference between crypto, fiat money, or shells as long as all those objects, physical or not, share value created by mutual faith in it. Judge J handed down his ruling in a case brought by Bybit against its former employee, Ho K Shin. We'll call him HKX. Bybit claimed the staff member transferred around $4.2 million of USDT from crypto exchange to her private accounts. Wow. The court has now ordered H, who's been accusing a non-present cousin of controlling the relevant accounts, to return all the money back to Bybit. While the decision may seem obvious, it contains some formulations important for the juridical status of digital assets. Judge J calls the stolen USDT, as well as cryptocurrencies in general, a property, even though they don't have any physical presence. The judge believes that we identify what is going on as a particular digital token, somewhat like how we give a name to a river, even though the water contained within its banks is constantly changing. He rebukes the common suspicion of crypto not having any quote-unquote real value, reminding that value is a judgment made by an aggregate of human minds. 100%. Judge J also classifies crypto in the category of things in action. In British common law, that means a type of property, personal rights over which could be claimed or enforced by legal action and not by taking physical possession. In his decision, the judge cited the consultation paper by the Monetary Authority of Singapore, the MAS, that will implement segregation and custody requirements for digital payment tokens. If it is possible in practice to identify and segregate such digital assets, it should be legally possible to hold them on trust, the judge notes. The decision mentions Order 22 of Singapore's Rules of Court 2021, which defines movable property to include cash, debt, deposits of money, bonds, shares, and other securities, memberships in clubs and societies, and cryptocurrency or other digital currency. In May of 2022, the High Court of Justice in London ruled that non-fungible tokens, NFTs, represent private property. The experts called the decision a great precedent for people investing in NFTs who might hope that the British courts could protect their property rights. I think it's a win, and I agree. The reality is you can actually physically hold your crypto, your tokens, on a hardware wallet, and you can literally flip that hardware wallet for cash. And you literally are holding your physical coins, sort of, but you get my point. They can be moved outside of markets, right, and be on a physical thing. A lot of people didn't know that. I've explained that to so many people outside of the crypto space, and they're like, oh, like, yeah, man. Anyways, moving on. SEC appeal could amplify Ripple's win, says Ripple Labs legal chief. Stuart Alderati says that an appeal by the Securities and Exchange Commission could see Ripple consolidate its victory over the regulator even further. Concerns of a potential appeal by the United States Securities Regulator to the landmark Ripple ruling earlier this month were shrugged off by Ripple's chief legal officer. Stuart Alderati believes that if the SEC takes the case to an appeal, the court could move to consolidate Ripple Labs' partial victory over the financial regulator even further. Speaking on a July 26 July 26 TechCrunch podcast, Alderati reiterated his position that XRP token does not constitute an investment contract and that the Ripple team would not shy away from any appeal brought to the courts by the SEC. We think the judge got that right, and we think that was a faithful application of the law, and I think a court of appeals will not only affirm that, but maybe even amplify that to even greater extent. On July 13th, Judge Annalisa Torres ruled XRP was not a security when sold to the public on crypto exchanges, but can be treated as a security when sold to institutional investors. On July 21st, the SEC used its ongoing case against Terraform Labs founder Do Kwon to air out its grievances with the ruling and hinted that it would appeal the split decision ruling in the future. Respectfully, those portions of Ripple were wrongly decided, and this court should not follow them, SEC lawyers wrote, asserting that retail sales of XRP should have been deemed securities. Well, I hate to break it to you, SEC lawyers. This is two cases where you've lost that argument. So when are you going to sit back and go, okay, we got it wrong? Tool bags. SEC staff is considering the various available avenues for further review and intends to recommend that the SEC seek such review, the lawyers added. SEC Chair Gary Gensler also exposed his disappointment over the court's decision on XRP, adding, we know all this. I hate some of these articles that keep reiterating the same stuff they said in a million different other articles. Blah, blah, blah. In light of the ruling, Alderati predicted if the SEC continues to claim that crypto assets themselves are securities, it would begin to lose ongoing cases where the SEC attempts to make such claims. Agreed. Because they continue to say the same stuff, even though they keep losing. Our case and a decision rendered by our Judge Torres, will provide comfort to other judges that the SEC is just misguided. Despite his optimism, Alderati warned the crypto sector is still a long way from standing on solid regulatory ground. He condemned the SEC's regulation by enforcement approach for causing crypto laws in the U.S. to fall well behind other jurisdictions. We still need a rational, comprehensive, and understandable regulatory framework for crypto in the U.S., he said, because of the SEC's refusal to faithfully apply the law. The U.S. has been visibly falling behind the rest of the world. I agree. Currently, XRP is changing hands for around 70 cents, up nearly 43% in the last month, according to Cointelegraph data. What are we at right now? $69.85. Yeah, we'll call it 70. Why not? And last but not least, holy snap. Okay. This is where, like, a lot of people, like I said, I don't remember if it was yesterday, but you guys have heard me talking about how I feel like a lot of people that are making price predictions are really shooting under the mark of what could potentially happen in this next bull cycle. Blackrock, the largest investment fund that manages $8 to $11 trillion worth of money, is now telling people that the optimal Bitcoin allocation in their portfolio is 84.9%. So 85% of your portfolio should be in Bitcoin. If this is what they're telling their investors, which I'm assuming they're going to, if they get their ETF, spot ETF approved, What do you think is going to happen if a quarter of that money, let's just say a quarter, pours into Bitcoin? What do you think that's going to do to the market? A quarter, let's just say 10 trill. Like I said, I think it's between 8.5 and 11 trillion is what they manage. So let's just say 10 trillion, right? Simple numbers. If 2.5, no wait, yeah, 2.5 trillion just from Blackrock alone pours into Bitcoin, what do you think's going to happen? The FOMO will be insane. Like, what did we get to? Just over $1 trillion this last bull cycle, and that put us at 70K. So from BlackRock alone, not retail, not anything else. So what would that put Bitcoin at? Like, let's say Bitcoin gets to 5 to 6 trillion, which I think is very possible. What does that do for the rest of the market? I think a lot of people, I think people are gun shy because of, and I've said this before, I think people are gun shy because there was a lot of big predictions that just didn't come to fruition last bull cycle. So people are like afraid to say how they really feel. So they're being very conservative on their price predictions. But the writing's on the wall, man. I remember back in 2018, 2019, when people were talking about a Bitcoin spot ETF getting approved, and it wasn't by people like BlackRock. It was much smaller organizations and funds. But the fact that BlackRock is stepping up and pushing this, it's insane. Like, I'm not trying to pump people's hopium, but I really think people are, and if I'm wrong, cool. I'm a conservative trader. Trust me. I'm not like out there fucking selling my house or leveraging my house to get into crypto. But I also think this could be absolutely insane. So let's read the article. In groundbreaking asset allocation study, the world's largest and most influential asset manager, BlackRock, suggests a game-changing Bitcoin revelation for investors seeking to maximize returns. That was a mouthful sentence. The study, which tracks BTC as a standalone investment asset, could be nothing short of transformative. While the study was written last year, it has gained newfound popularity across Twitter. BlackRock advises massive Bitcoin allocation. The study conducted in April of 2022 analyzed the performance of Bitcoin as an asset from July of 2010 to December of 2021 on a monthly basis. BlackRock's findings indicate that for a 60 to 40 portfolio, 60% of equities and 40% of bonds with a fixed risk aversion of Y equaling 1.5. I don't know what that is. The optimal allocation to Bitcoin is an astounding 84.9%. The remaining 15.1% is suggested to be split between equities, bonds with a 60-40 ratio. There's some graph. I'm not even trying to understand it. Commenting on the study, Joe Burnett from Blockware remarked, a great chart published by BlackRock. Investors with long time horizons should hold overweight equity portfolios. However, now that Bitcoin exists as a superior form of money and savings technology, investors should consider an optimal Bitcoin allocation of 80 to 100. This is madness. Burnett's observation raises eyebrows, and he believes that if all investors adopt BlackRock's recommendation, Bitcoin allocation, the value of Bitcoin could soar to extraordinary heights. He suggests if total global wealth is 800 trillion today, Bitcoin would be worth 190 million per coin. This potential surge in Bitcoin's value would make it worth more than 5 times the total combined value of equities, real estate, and bonds. The implications of such moves by investors would be far-reaching, as it could significantly impact the overall financial landscape. However, the idea of Bitcoin as a must-have asset in every portfolio is gaining traction. Several banks have come out with a Bitcoin price prediction of above 120K over the past few weeks. I think we're going to blow past this. Yeah, I really do, guys. Notably, Blackrock's report acknowledges the extreme volatility of Bitcoin, but highlights its pronounced positive skewness, which makes large allocations of the digital asset highly appealing and potentially dominating in utility functions. Okay, so is Bitcoin highly volatile? Sort of. Because it swings high, it swings low. It swings high, it swings low. And if you're looking on the grand scheme of things, let's just go to the monthly. God, my lines are dog shit. I'm sorry, guys. Don't look at all these lines. It's done nothing but go up. And yes, it'll correct. Yes, it'll do what it does. I don't know how else to explain it. But it's continuing to go up. Look at this. Oh, I don't know, 351,000% gain over the course of 13 years. I mean, this is what's so insane, and it continues to do this over and over and over and over again. It's never going down to fucking zero again. Does it sometimes swing lower than we expect it to? Yeah, of course it does. But does it continue to move onward and upward? Absolutely. So on a long-term scale, if you and I know it sucks to hold when something's tanking the way it does, but if you're let me say it this way, and I'm rambling way too much, and I've got to wrap this video up, and I'm sorry, but just hear me out. So many people reach out to me, especially in the heights of bull markets, and go, is now a good time to buy? And I always ask a question. What is your plan? Are you trying to flip it and make a quick buck? Or are you planning to buy a bunch of Bitcoin and not look at it for the next 10 to 20 years? And everyone always says, I want to buy it and not look at it for the next 10 to 20 years. And I go, yes, then right now is definitely a good time to buy. Right now is always a good time to buy if you're not planning on touching it for the next 10 to 20 years. The caveat to that is every single one of those people will call me 2 months later and be like, it's down. What the fuck, man? Stop being so goddamn emotional, I guess is my point. All I'm getting at is if you're looking at a long-term investment, not a quick flip into dollars, if you're looking for a long time, there's nothing better. Risk reward, there's nothing better. Especially if you're buying right now at these levels. I guess I hope I made my point. So it's not really volatile is the point I'm getting at. It is, but it's not. It's almost like volatile to the point of as a benefit. If it dips super hard, buy more at a lower price you never thought you could get. Especially, again, if you're looking at holding for 10 to 20 years. That's my best advice I can give anyone, and I think it's fantastical if that's the game you're playing. This study is also interesting in that it could shed light on how heavily BlackRock could promote Bitcoin after the spot ETF is potentially approved by the U.S. Securities and Exchange Commission. Here it is important to remember the story of the first gold ETF, which could repeat itself. The gold price rose fivefold after the first ETF in 2004. A weighty reason for this was the global presence of BlackRock's financial advisors, who promoted a 5% gold allocation in each portfolio as it must have. And that was just for a 5% gold allocation. Now they're saying an 85%. The Bitcoin spot ETF race. We all know about this. Speaking of ETFs, countdown for the first spot Bitcoin ETF approval is approaching fast. BlackRock filed for its spot ETF in mid-June, with the first deadline for the SEC response set for September 2nd. While the SEC has not yet approved a spot ETF, many analysts believe that BlackRock stands a strong chance of being the first. However, the ARK and 21 shares Bitcoin ETF are first in line. After refiling has passed the first deadline, the second one is on August 13th. Moreover, Bitwise first deadline ends on the day before BlackRock on September 1st.